on the air because I don't even know. Like it is what it is.
Yeah.
You know? Remember that trade secret I told you?
The trade secret that you told me while guess what?
What?
We're live.
Just kidding.
Yo.
What?
It's looking interesting in the chat.
Really? Hold on. I gotta actually share. Wait, tell me who is first before I look at it.
Jalen.
Okay, Jalen. How you?
Second time in a row. And right behind Jalen, we had Reggie, cousin Reggie.
Reggie, you slipping.
Yo, but it's interesting because somebody actually spelled jam. Like 2 people spelled the word jam. Though that's not, come up series or come up. Dope. Shout outs to you, Macintosh, Bell, and I guess Nah.
Okay.
Go figure. All right. So how are you today? Like it's been. Can I just say something real quick?
Go ahead.
I am so excited. You know why?
Why?
I found my pencil.
Oh, how are you losing your pen? Like it's magnetic. How are you losing it?
Sometimes, things happen in Monroe Manor, and it may fall into a couch.
Oh, okay.
When discussions are being had, or I may fall asleep on the couch with butter, watching a TV show, watching charts.
Okay.
So.
I don't keep it on top of the iPad anymore because it drains my iPad, so I just keep it separate.
It does. So normally what I would do is I would have it posted on something like this.
Yeah.
But,
Oh, that's what I'm going to start doing. I have this mirror right by me.
I'm so glad to be reunited with my pencil.
I'm so happy to be reunited with SMH, honestly.
Oh, okay.
Learning some things.
Like I said, as the world turns.
I feel like we needed like some music right at that point.
I know, right? Somebody needs to create a song, or like maybe even use like a soap opera type theme.
Mm-hmm.
And then have Jolene Space with SMH, and then
leave me out of it. Okay.
Hey. All right. So how was your day? Well, what was going on? You mentioned SMH. I'm probably sure we're going to get to that in a second.
Are we though? Yeah, we are. There's some questions about SMH. It was pretty good. I was tweeting earlier about how I felt like, like when back in the day when you were at daycare and you were the last kid to get picked up. If you went to I was in daycare. I was a daycare kid. But this time I felt like I was the first kid to get picked up, and by my step parent, aka XLY, and like my parent XLK had ice cream waiting for me at the door. So I was feeling good, and it's a sunny day in Seattle. So yeah, I was feeling good.
Okay.
I like the way rotation feels when it's going towards my sector base.
Your sector?
Yeah, I like how that rotation, it feels glorious. But I can't front. When it's off, you're just like, man, y'all are tripping.
You need to get some get right.
Seriously, get right, act right, all the rights, no wrongs.
Well, I'm excited for this week. So a lot is taking place. But before we get to what happens later next week, let us talk about today.
Let's talk about today.
By the way, for those of whom didn't have the opportunity for, I guess if you didn't hear me say it last week, I'm going to say it again because I feel like it. I hope you had a wonderful, happy Juneteenth and was able to celebrate, our history. And on top of that, not only just the struggle, but also the journey to freedom, as well as the progress in which that we're making today. So there it is. Also, shout outs to the fathers out there for Father's Day, because we didn't have the opportunity to wish each and every single one of you that are fathers out there happy Father's Day. So boom, there's that. And I don't know what else, but I will say this.
Wait, are we going to do announcements later? Yeah, let's do them later.
Are we gonna be like the Black church and then be like, in the middle of the service and be like, it's time for the announcements?
Yeah. Let me do my first deaconess voice on.
Uh-oh. First giving honor.
Right, where's my tambourine though? Okay.
Oh Lord,
Don't
here
play.
we go. See,
Don't
I felt
play.
triggered. All right, so what's up, everybody? I'm Mark Monroe, accompanied by my wonderful co-host and friend, and just also dopeness in producing. I mean, have you seen Wealth Rituals? If you haven't, well, go ahead and hit that subscribe button so that way you can subscribe and see more content that's being produced. And on top of that, go ahead and hit the like button if you want to get this out to other folks, because I guess apparently it helps the channel. And on top of that, finally, go ahead and hit the bell so that way you can be in the know just like Jalen was today. But I'm going to send it over to the wonderful, the galactic Catalyst out here in hella traffic.
Yes, okay.
The wonderful Jolyn GC.
Thank you. What's up, y'all? Jolyn GC, the place to be, and I'm super excited. Okay, let's talk about this market though. So we have the Dow coming in at 68.61 points. We have S&P 500 at 21.65 points. The Nasdaq with all-time highs at 111.75 points. The VIX was at 16.66. Mark, you'll have to tell me what the 10-year Treasury note is. I don't know why I always forget to look that up, but every time I'm here, I'm like, oh yeah, I need to look that up. So we'll get back to that in a moment.
10-year Treasury is at 1.463. So it's actually dropping in the aftermarket.
All righty then. Now for sector performance, yo, you already know we keep track of these 11 sectors. There's 11 of them, y'all. We track the top 3 and the bottom 3. So we can do what? So we know what that sector rotation looking like. And today, that sector rotation was looking fine. Anyway, we got consumer discretionary, technology, and communication services in the top 3. Bottom 3, financials, real estate, utilities, where I feel like they should stay. Now, for pick performance, as you know, you can find our picks over at That Come Up series on our Instagram page. Get your scroll in, you'll find it. Coming in at number 1, we have Roku, then Twilio, then DocuSign. I don't know who, let me know in the chat who's all in Roku, Twilio, and DocuSign. Because if you are,
yeah, who's in that?
Kudos to you. Go ahead, Mark, put yourself in the chat. Anyway, then on bottoms, we got TBT, Boeing, and C-Web coming in at the bottom. And out of those 3 bottoms, it was Boeing. Every time I see B, not BOA, but BA, Boeing, and C-Web in the negative. We had some 52-week highs, y'all. Shout out to the one, the only, FTNT. And then also further shout out to Adobe. If y'all watched the pitch competition, you saw a pitch for Adobe, which was dope.
Indeed.
Then we got Target. And last but not least, we got Microsoft.
Interesting. It's going to be an interesting week for Microsoft, but I'm sure we'll get into that.
And we totally will get into all that. Now, if y'all are expecting some Black history at this time, I want you to know that we do the Black history all the way leading up until Juneteenth. So you won't hear any today, but you can prepare for next year when we have the history, the lead up to Juneteenth. But you know what? Every day should be Black history anyway. So y'all should just be finding your own facts and talking and discussing. Mark, are you okay? Here's some things that we definitely need to cover today. It's Trade Talk Tuesday, so you know we got to get into these charts or whatever. So we got to look at charts. There's a few couple of charts we got to look at. And particularly, I would love to look at charts from the top 3 of my, what I'm now referring to as my sector bays. I need some charts from consumer discretionary. I'm thinking Amazon for sure. We need to take a look, little peek or whatever.
Are we talking about 52-week high Amazon?
We talking about big boy Amazon. That's what we talking about. A through Z. Okay. And everything in between. And then can I talk communication services? I'm looking at Netflix like, oh my goodness, where have you been? You're here now. So I'm looking at Netflix. So
Where
That's what
should
I
we
want.
begin? Where should we begin?
Well, let's just open up. Let's just, look at some charts and let's look at some let's spend some time with the NASDAQ today. Let's look
Okay.
at the NASDAQ and see what's popping. Oh, and then also while you're setting that up, then we do have, some just a little sprinkle of Hot Take Thursday since we won't be doing Hot Take Thursday because we have a special guest. So yeah, a little bit of this, a whole lot of that.
I'm here for it. All right. So I got it.
All right.
All right. So I want everybody to take a look at this. Now, it's funny because, well, it's very interesting because the only thing I have to do is just keep like stretching it out, like the trend line. But I think back when I did this magic trick, I kind of just like kept it as is. Now, here's some interesting things in which that you can look at. Now, today we're going to go through like a small little chart session and looking at the NASDAQ composite. So, I mean, in this one, it's IXIC for anybody that needs it. In some cases, it's a little different, but where we're at right now is we're pretty much at a pre-breakout level for Amazon for the NASDAQ composite. Now, essentially, this is around the time that you're going to start seeing some companies break out. How do we know this? I'm glad that you asked. Let's journey back in time a little bit, shall we?
Yeah.
So if we journey back in time and look at the month of June, after June, we literally start to like really around mid-June, or early to mid-June, we start to go on what is a run. And then around August, we start to take a dip around like the September area. And then we go for another massive run. Now, of course, this was in 2020. So of course, for me, I like to look at it from other historical areas. So if we look at it like here, we had this like slight little uptick, and then essentially we pulled back and fell deep. Now, this was also, again, take this into consideration. This was around the time that the yield curves inverted. Again, a very sad time in my life, but you know what? It's okay. We moved on. And so then I feel like this feels like a little bit like 2019 a little bit, because we went on this great run. And then as of like the early part of the year, we had this significant dip. And then of course we ran up again and then we dipped again. Now, I could be wrong, but what I could be seeing here, not maybe in the NASDAQ, but maybe in the S&P 500, where you could probably be seeing it take a little slight dip. And I think the reason why you're going to see that is because of the fact that you're going to see some strong rotation coming through. Now, remember during this time, you saw it go on some significant highs, and then essentially it kind of settled back into space, and then essentially it blasted off again. So historically, you typically see that happen throughout the NASDAQ. Of course, the NASDAQ is not just built up of Apple, Microsoft, and Facebook, and Google, and Amazon. It has a wide array of different companies that are in there, including some that are non-tech, like, for example, Health. Health has been on a significant run this year, and ultimately it has yet to really even go into correction at all. So there's quite a few sectors, if you think about it. I would say, though this is not an endorsement, if you get the chance, use CNBC so that way you can go to their section where it says markets and literally go to, I think it's like sectors, and then start looking at the sectors and seeing exactly what their seasonality is. It's a little cheat code for you. So what you can do is you can look at each sector and see exactly what parts and time of the year do they typically fall apart or they become not so strong. And typically around this time, especially when you've had such a great run in value stocks, I mean, people start to get a little bit exhausted, and you're starting to see that. I think that if we look at where the rotation started, where the actual party for rotation got started, I think it's around this point in time here, where we're around the May 12th, May 14th levels. And ultimately, as you can see, the NASDAQ just took off. Now, how do we do this? How do we compare it against, say, for example, something so that way we can get a frame of reference? Well, let's look at the DJI, if it allows us to see it. I don't know what's going on here. All right, so there we have it, where we're starting to see that there's a little bit of weakness here. So you're seeing this convergence between, say, for example, people are now more so focused towards the NASDAQ. So people are rotating into the NASDAQ and look at the Dow. It's kind of like starting to, go in inverse direction. So something to definitely pay attention to right now, where you could be seeing, and that's where you're talking about where you're seeing a lot of folks rotating out of, say, for example, things like financials, materials, energy, industrials, and consumer staples and utilities. So that's something that you want to be focused on. as we move forward into the second half of the year, because normally around this time you start seeing people position into places like, for example, technology. You start to see more announcements from consumer discretionary. And on top of that, I mean, without the infrastructure bill, things look a little bit dicey for some of your industrial based companies. So that's something to definitely be on the watch for. Though I'm probably sure that once we get this infrastructure bill, we'll probably see a little bit more strength coming out of the industrials and maybe some of the materials. But I mean, I'd be really worried here for the Dow, because what we could be possibly seeing is a potential setup for a potential dead cat bounce, which is pretty much meaning that it bounces up for a hot second, but then ultimately just as its last hoorah, and then essentially it drops.
Geek.
Now, it's something not for people to be really worried about when it comes to the Dow Jones, because it's really just 30 companies. I would really like focus more so towards the S&P 500.
Say more.
So the S&P 500 is like, you really can't really give a good reading from the Dow Jones Industrial significantly anymore. So if I was you, if you wanted to get a better read, I would probably look at, say, for example, the SPX, which is the S&P 500 index. So it tells you, and it's reading a lot as, say, for example, the same thing where we're seeing some of the same behaviors within the S&P 500 and the NASDAQ, as well as partly the Russell 2000.
Okay, so Mark, well, you already showed us a magic trick.
I have.
But there was something else.
Is it?
Yeah, there was something else I wanted you to share today.
What's that?
You know, I'm thinking of like alphabets and stuff.
Okay, I could show you. So one of the things that I've been going through, and you know, for everybody that doesn't know me, I like to make knowledge fun for everybody. But at the same token, it's like, you know, don't get it twisted. I started off as a day trader back in 2004. And so some of the things that I would look at was many times if I was up early enough, I'd be paying attention to the early pre-market behavior. And then I would use that as a gauge for myself to really look at for my entries and exits into positions. Yep, Mark did that. So there's this thing that you probably have heard about within the trading world or the day trading world called the ABCDs, or, you know, everybody has a different phrase for it, but I like to call it the ABCDs. So let's look at, say, for example, Amazon today, since I can kill two birds with one stone. And let me pull this up. So normally it's like a lot of times when you see me, I'm looking at things on a 1 year basis. And again, this is looking very, very interesting for Amazon in moving forward, just as a heads up. But, you know, it's like I get a lot of questions of folks like, okay, well, where should I enter? Like, how should I enter something? And you can look at it from here because of the fact that you can see the gaps in space. So for example, gap here, you can see a gap here. I mean, multiple different gaps along the way. But here's another interesting thing that you can do. Markets tend to have something called behavior, and which that you can also, say, for example, see on a consistent basis. So in this case, I'm going to set my chart to a one day. Yep, I'm looking at it on a daily. Mm-hmm. And so what I tend to do is I'll try to set it as close as I can to, I guess we'll use it and under 15. So whatever. Okay, so here we start today where we see that the market essentially popped for Amazon. So it popped up in its first 15 minutes. And then after that, within that time span of the first 30 minutes, first 45, essentially you saw that that Amazon came back down. Now, ultimately what you'll see is that normally if something tends to come back within the first hour, so within the first hour, if we reach a high point, then that's letting you know that essentially that we're going to go up to challenge some of those highs for the day, or we're actually going to have a pretty high day. Now, normally if you see it and let's backtrack it a little bit, shall we? So let's go all the way back to, actually we can take it here. So on a day like today, or the day before today, we saw that on the 21st that Amazon had took a drop. And then at the same token, it came back up. So this is within the first 30 minutes. And then, or the first, yeah, this is the first 30 minutes of it being open. And then after that, we saw Amazon literally go down. Now, one of the things I noticed is it didn't come back up to this point until, say, for example, later on. So here we have at 1330, it showed that it wasn't going to have the strength because here we are at 1430 and we didn't make it back up to the high point. Normally, when you don't make it back up to the high point, even though it may have somewhat of a little bit of a bounce, 9 times out of 10, it's going to go back down. And so on the other side of it, if we flip the coin, then essentially when we have these moments where we can come back up within the first hour, then 9 times out of 10, we're actually going to have a much more stronger day. So why is this interesting? Well, I'll make it interesting by looking at a different company, something a little bit more refined for everybody. So let's look at a company like Apple, and we're going to look at it again on a daily. So here's the day chart for Apple. Now, normally here we're looking, this is on a 1 minute. So we're getting a little bit more refined for everybody, but I'll try to spread it out for everybody so that way we can see it. Okay, so here's Apple this morning. So on the minute, so as you can see, we spiked all the way up to the top in the early few minutes of Apple's trading, and then essentially we dropped. Now, normally when you see these spikes right after that, after the spike in the morning, you're typically going to see something where, of course, you see your day traders or your early morning traders that are taking profit. Congratulations to them. Now, some folks are like, well, most of the time you see people that are spectating the market around this time. So they just sit there for some reason all day long and just literally just watch the chart or just watch the ticker move. You don't have to do that. So what you can do is if you're looking at an entry, even if it's for a long term or whatever it is that you're doing, you can actually use this as a good gauge because then this can produce an entry for you. So as we see here within, say, for example, the first 30, we came back up slightly to challenge those highs of Apple. Now, of course, Apple was actually scheduled to have kind of like a flat day for the most part, but then ultimately something kicked in for Apple. I won't tell you, but I would challenge everybody to actually go look into that of what actually took place. So then essentially it caused Apple to spike. For example, we saw some heavy duty spiking activity, especially going into the close and throughout the day. We saw just a significant amount of buying. So it's never a perfect science, but it actually lets you know that, okay, hey, within the first 20 minutes of trading, you can actually spot yourself a pretty good entry. And then essentially from there, whether you're playing a midterm or a long term, then it's pretty good because now you just found yourself a good price while everybody else is taking profit. And that first 20 minutes, you can actually pick your entry and essentially literally reap some wonderful early short-term benefits in your midterm and your long-term positions. Now, if you're playing the daily or if you're playing, say, for example, the weeklies, if that's your speed, then I'm probably sure that you've probably studied this before. I'm purely just looking at this purely just for folks who are sort of looking to get in on a solid entry for the day. So essentially, it's like this is where we look at it in the sense of behavior and levels. So if you plotted out your levels on the chart, but yet you want something a little bit like, especially on the day when the market tends to move a little bit fast, really always what you can always account for every day within the first 20 minutes, somebody is going to be taking profit. So even when a stock spikes, 9 times out of 10, it's going to have some type of red candle that's going to send it down. And that's an area of entry in which that you can actually take on and say, hey, I'm in here. And I mean, enjoy yourself. Now, should I show them the opposite?
Definitely.
Okay.
Definitely.
All right.
And also why it's called ABCD.
Aha, au contraire. So let's look at it from, I'm going to take Square, for example.
Oh, nice.
Let's look at Square. Now, Square had some very interesting activity that took place for today. Mm-hmm. Because, of course, Square's behavior is very much so indicative. So let's talk about the ABCD real quick. So the A is essentially this initial pop that you see to the upside. And then after that, you have the section in which that it literally just drops like a rock. That's the B. And then the C is essentially where it's trying to establish a timeline to get back to essentially a certain level. Now, again, here's what you can do. On A, you see kind of like what the stock wants to do for the day. B is essentially what people are doing within the market to react. This could be an area in which that you can become a buyer. And then also around this timeline, as you're starting to see that it's getting back up to this level, if it doesn't get back up to this to its highs for the day, then ultimately you could just say, all right, well, I could be a buyer, or I can wait for another place in which that it can just drop again, and then find an area in which that, okay, hey, I'm comfortable. Now, mind you, we're 2 hours in on the market by this time. So essentially the market has produced two dope opportunities for you to step into the market. Now, when we talk about the D, is pretty much where it's just running on. And that's where essentially you've established a seat, and essentially the stock has shown you. So naturally, here's the areas in which that you can buy. You can either be a buyer at B, or you can be a buyer at level C. So let's do that again. This is A, the pop up, B, the drop, C, the reestablishment within the first hour or so. And then essentially the D, which is essentially the D section, is pretty much what happens throughout the rest of the trading day. So pretty much once you've picked your entry, then ultimately you can, pretty much say, all right, hey, cool, I'm just taking my seat. So now when we look at Square took a little bit longer. Now, mind you, Square was indicative. Square is going to be very much so indicative of what's happening with Bitcoin. So if you ever look at Bitcoin's chart, you will see that essentially that whatever happens for Bitcoin, there's going to be quite a few stocks, like, for example, MicroStrategy, Square, Riot Blockchain, and a few other companies that are out there. They're going to significantly take hits when, say, for example, Bitcoin goes for drops. And then when Bitcoin pops, then essentially then you have a strong sign for, say, for example, those same companies to be positive for the day. It's unfortunate because at the same token, it's not like Square has bought up exorbitant amounts of Bitcoin, but the fact that people buy and sell their Bitcoin through Square's platform, I guess that ties them together. And the same thing for some of the other players. But at the same token, I mean, it provides an amazing entry for folks in which that are looking to get into these positions to invest or to trade. So again, remember, the pop early on in the first 20 minutes is the A. Now, within that same 20, you're probably going to face the drop, which is the B. So if you can get in around the time within that first 20 minutes of activity, it sets up as a beautiful entry for you. So essentially from there, you take the B or the C, the journey up, and pick your level somewhere in between time. Now, of course, be cautious, because it still has to establish that level of where it initially popped to. If it does not, then the stock will probably struggle throughout that trading day. And there you have it.
Let me add a little sauce to that right quick. Y'all know, if you really know me, you know that I love wordplay, alliteration, mnemonics, all that stuff. Like, that's legit how I got through law school. So for the A, B, C, and D, you heard the breakdown, the definition and description of each section. So how I remembered it, and I actually used this morning while watching Tesla. So A for at the market, meaning get up, you would have already had your pre-market information ready to go. You got your charts ready, your watch list, all that. So you're watching. So A would be at the market. You're looking for that opening spike. B stands for break. That stock is taking a break, a rest. C would be coming back to the level. You're trying to see if it has established that level, that retracing period. And then D is a done data, a done deal. Likely you would have executed a B or C, and then the rest of the day you're chilling. So, or you're watching the market, however, whatever flips your skirt. But
you can do the same thing also for day. You can also do the same thing in the day for, say, for example, your exits also, because a lot of folks struggle where to exit. So I'm going to pull up another stock.
Yeah.
I'm going to pull up another stock for folks, which I feel like this is very fitting given what's going to be taking place on Thursday.
Yes, let's talk about it.
All right. So here we are. We're looking at Tesla's chart here's Tesla for the day. As you can see, a lot of choppy behavior, significantly a lot of choppy behavior. But here's the interesting thing about it. If you notice, Tesla popped within the first hour of trade, or within the first session of trading. So let's make it a little bit more refined, shall we? So here's Tesla on the daily. All right, so we see that Tesla pops early on in the morning. So we pop at up to 625, right?
Mm-hmm.
But then essentially, of course, like anything else, it drops. And look at where it dropped all the way down to. It dropped down to 616. So again, it's like for you, if you're already in the position, then you're like, all right, well, hey, this is definitely not where I'm going to be a seller, because you don't ever want to be a seller at the low. So of course, as you can see throughout the time period, Tesla's ultimately toiling and jockeying for positioning, because of course we have this timeline here. So essentially it took us a little bit of time, but we ultimately got there. Now, again, Tesla was trading choppy because of the fact that, again, today also Tesla's also one of those companies that's also tied to Bitcoin. But then once when it made it back up to that level C area where it has established, say, for example, that it established that I can make it back to level A, then, hey, now it's like there's more room for me here. So now when we get to level D, then now you can actually be choosing, all right, well, if it made it back up to the level at C, then at D, then I can be a seller. So this is level D. So notice how many times you've pinged. You've pinged here, and on top of that, close to the close, you pinged as well, where we were pretty much sitting at, I think it was like 626 or 628 a share. So, and then of course it settled back down to 624, or not really 624, but more like 623 for the day, and that closed it out. So just think about it. Now for all those folks that are literally looking out there for, say, for example, your day traders or whatever it is, here's how a day trader would see it. Just, let me flex those muscles a little bit. So for me, if I'm a day trader, then I'm looking at it at level A where it pops, and then ultimately I'm not going to be a buyer here. But ultimately, when it drops all the way down here to 616, I'm definitely a buyer, or I'm definitely looking. I've definitely opened up my trade again within the first 20 or so minutes of the market. Now, of course, I'm looking very specifically where it's like, all right, well, I'm seeing that essentially that somehow, some way, it's not going to be the end of the story here. It never really is after the first 20 minutes. Because somebody's going to be finding this as a deal. So I'm really looking at this area in which that I can dump off. Now, if I'm seeing strong signs in which that it's getting back up to this level, I'm going to let it be for a little bit, but I'm not going to stay there forever because, again, I'm a day trader. So 9 times out of 10, when I get to this point where I've gone to a whole new level and I start noticing that we're getting a little bit choppy here, I'm selling. So now I'm a seller here at the 628 level. And ultimately, I'm literally not having to worry about all this. If anything, I've sold, and then maybe, just maybe, if I'm being even a super duper dope day trader, I spot this opportunity and I put this on my watch list or as a save order for me to possibly look at getting into tomorrow. And this will be kind of like the remembrance of the level that I look at for another trade if I'm looking at trading Tesla again. And that's that.
There's requests to look at Roku that way, but then also one that didn't, I would like to look at the opposite one. So Boeing didn't do well today. So looking at Boeing would be helpful to see the opposite.
Let's do it. So here's where we're going to look at Boeing. So we'll pull up the chart for the Boeing company. Okay, so here's where I look at it for Boeing. So again, I see that there's a pop here, and then essentially I see that there's a drop within, like, again, those first 20 minutes. So of course, I'm looking at this point. Now, of course, I'm seeing that there's some huge gaps here in which that Boeing has actually fell from. So of course, if I'm looking at that from yesterday's close to today, then I'm going to be very, very cautious and probably kind of like wait till I get to section C before essentially it's like I'm even looking at anything else, because of course we just have some significant drop activity. Now, of course, if I zoom out now, of course, this is where I always tell people your chart is always your best friend. Even if you're a day trader or you're a short-term trader or you're a midterm trader, whatever you are, 5-year charts are always your best friend, because ultimately you can kind of get a good gauge of the overall perspective of a specific position. So notice here, I'm seeing here that Boeing is sitting here treading this line here, but then I'm going to also add in some friends here. So as you can see here, we see the moving average is at 200, and then on top of that, we have a 50-day moving average where it's currently trading above. But at the same token, I'm seeing this swoon start to take place within this chart. So I'm starting to see the 200-day moving average gap up. And at the same token, I'm starting to see that we're starting to see a swoon to the downside on the 50-day average. So what we could possibly be seeing for Boeing is that and as a matter of fact, unless we get some better news that's coming out for Boeing, we could probably be seeing Boeing's 50-day moving average and 200-day moving average coming close to each other and possibly doing a cross like we've seen before. Now, of course, we saw this early on where essentially it traded below its 200-day moving average for so long. I don't think that we're going to have that, especially since we're seeing a lot of turnaround within the company. But yet at the same token, it's like, is Boeing is loved? So for me, I'm looking at this on a historical part of saying, all right, well, Boeing is currently trading at its December highs, and we're not even anywhere near close to those highs of March. Now, notice it reached its peak point in March, and since then, it's been kind of trading in its level. So ultimately, I'm asking myself, can we get back to this 259 level? All right, so now I come back to the day chart. All right, so now I see that, okay, well, yeah, we're not at the day chart. So now I see that essentially that we've dropped. So now it's like, I have to ask myself this question, is this something that I want to be in? If it is, then I'm going to be looking at it here in this level around here once when all the selling has kind of subsided. So normally when you see in level C, normally you start to see that the market starts to get a little bit more calm. So essentially all of the volatility, all the volatile activity typically takes place between levels A and B. And then the market tends to settle around levels C and D. So if I'm in level C, and if I'm saying, hey, this is a pretty dope entry, and if I'm seeing signs in which that, okay, hey, first off, we hit here, I'm going to be watching and saying, okay, hey, what do we look like? Are we still pinging a level? We keep pinging this level of 241 across the board. So that would be my level of entry right there. And then ultimately, essentially looking to play towards the upside. If I still believe, looking back, if I zoom out on a 6-month chart, if I still believe that we still have opportunity, though, that we got to get to the 248, and then we got to get to the 252 before we can even touch the 258 levels.
Nice. Okay, so that's for entry and exit purposes, y'all. Y'all are grown, and I, for real, do not. I promise you, I do not want to hear anything about, oh my gosh, I did this day trade and lost my entire inheritance. Or
yeah. This is purely focused for you to look at it from a purely a TA or technical analysis perspective. I would probably recommend to everybody in whom that is like learning this information, please go do this as it pertains to paper trading first, so that way you can build up those muscles. I mean, for me, it's like one of the things looking back over my timeline of being a trader in the early days as a day trader, one, it was hella stressful. And keep in mind, I also had college. So you can understand the vibes of what I was going through. And plus, I didn't have an iPhone in college. I had a Nextel phone. So, and then of course, Wi-Fi never was what it was today. So we didn't have gigabit internet speed. I mean, so you can truly understand what I was going through. So, I mean, for me, it was just like, all right, well, if I had paper trading back in the day, I would definitely have strengthened up my skills and everything else by becoming better when it comes to looking at the technical analysis and running it by running tests consistently, just to essentially just build those muscles. Like there's a few muscles that you have to build. On one side, you have to build the muscles as it pertains to just understanding what you're seeing. The second part that you have to look at in what you're understanding is, say, for example, the emotional part to it. Because a lot of folks, especially like from last year to this year, a lot of folks weren't really prepared for those emotional ups and downs in which that the market typically gives and takes. So essentially, it's like if you're not ready for that, then it can really come back and hit you like a ton of bricks, and it hurts. So honestly, it's like during that period of time, really desensitizing yourself from a lot of those emotional pieces. Now, of course, it's going to be so hard because of the fact that you're dealing with paper trading versus using your own capital. So I would probably say just build the muscle first of just the knowledge and the understanding, and then essentially, start off with a few training wheels. And then essentially when you start to feel a little bit better, then go in. This is the reason why I always tell people to focus on the long term first, because with the long term, it takes away the fact that you can still be in the market, but at the same token, you can also start to understand things that are happening and start learning the things. So that way, when you start feeling more confident and comfortable, and you start to build up somewhat of a risk tolerance, then it becomes easier because of the fact that now it's like you could take a few chances here and there without sacrificing everything in which that you're building for the long term. That's ultimately the focus of having security in spades.
Makes all the sense in the world.
Mm-hmm.
Disclaimers on disclaimers. Okay, so for a little bit of hot take, just a little. Let me see. Here's a question, and it's kind of Trade Talk Tuesday kind of question. Do you see out the money premiums recovering from IV crush that occurred from February to now?
I mean, and that's the beautiful thing about implied volatility. It can always swing. It can always swing one way or another. It just depends upon where you're at when the pendulum swings. Like I've been in a trade. I'll tell people about a trade that I did a little while back. I think it was like in 2019. Mm-hmm. So a few years ago, I was doing a Qualcomm trade. And the Qualcomm trade literally, like, the IV and everything else just like killed my position. And then on top of that, didn't help that. I think it was actually 2018 where Qualcomm and Apple, they were just significantly beefing with each other. And then I think Qualcomm won the case, but then we got word that, Apple was going to appeal it. Mm-hmm. But then it was just like, okay, well, people were really saying, okay, well, what's the difference? So this was during the chatter, and then the case happened. So I was like, you know what? I'm feeling very confident because Qualcomm had a very strong case. And then I was like, but then I started getting a little worried because the stock just started dipping significantly. And the IV was just crushing my position. So I just literally wrote it off as a loss. 99 or 98% loss. So pretty much, I'm not going to sell it anyways because it's pretty much no par value. So whatever. And then they won the case. And then the IV just literally just kicked in. So I went from being down 98% to being up 180% in a matter of, say, for example, a few hours. Girl, when I tell you I could not sell, I could not sell that fast. I was literally trying to sell, and each time that I kept trying to sell, the estimated proceeds of which it was telling me was not reflecting what my brokerage account was telling me. I legit had to call my broker, literally just to let them know, like, hey, I'm trying to sell. And he was like, yeah, you and everybody else are trying to sell. And he was like, well, let's see what I can do. Luckily, I was able to get out. I didn't get the percentage that I wanted, but either way, it's like, it just goes to show you sometimes that the market is like, it's something, even when you do some of the best technical analysis, the best fundamental analysis, the best quantitative and qualitative, even then the market can still come around and just surprise you with, say, for example, specific events that cause it to spike. So, yeah.
Yo, we're gonna have to do like a little story time series with these stock tales because
I've got a lot.
Yeah, I want to sit down and just,
wait till they hear the story about me during finals week.
Oh my gosh. Yeah, I want to sit down. When Steve comes back, we need to just sit down and have a little, just for real, go through.
We're going to have like a red table moment.
Something, something akin to, because I know there are so many stories and like a lot of lessons that could be gleaned from those stories.
Yeah.
So that'd be dope to kind of capture that.
Especially when I can't wait to tell probably the story later on about my first encounter with margin trading.
Oh Lord. Okay. That's the season finale.
That's the season finale for sure.
Yeah. Season finale. So another question here. Why are yield bonds so important?
Okay, so here's the reason why. Let's just do a simple breakdown. A lot of folks think that it's fundamentals that move the market, or the fact that it's ultimately this that moves the market or that. No, let's just keep it simple. The market typically moves from the bond market. So whatever the bond market reflects, and ultimately then essentially the stock market will ultimately react. And that's what you're seeing taking place right now within the marketplace. So within the marketplace, what you have right now is you're having this push-pull between Wall Street versus, say, for example, the Fed. And Wall Street is making a bet that's saying, hey, inflation inflation is here, then you need to really significantly account for this as it pertains to rates, especially Wall Street banks. Now, of course, what is a yield for anybody that needs to understand? When you think about a yield, like think about like dividend yields, or say, for example, interest rate yields, whatever you want to call it, it's really the profit. So it gives you a percentage. And so when you see the interest rate yield, then that's pretty much the percentage of profit in which that essentially that you can receive for that bond. So essentially, the higher the yield, the higher the profit return. The lower the yield, then it's letting you know, of course, I mean, simplistic. So when we see yields at a higher rate, then that means that essentially that people are more inclined to want to go towards interest rates, or say, for example, bonds, because they look more attractive and they look more safer. Now, of course, that can crush, say, for example, growth stocks. Hence the reason why you saw growth stocks, aka tech and consumer discretionary, getting significantly crushed during the early part of the year, because of the fact that, one, there was an interest rates spike. People were afraid of inflation. Wall Street was expecting a 1.75 or 1.8 in interest rate yield. So essentially that when interest rate yields go high, then growth stocks look less attractive. Why? Because of the fact that we're talking about inflation. We're talking about the value of, say, for example, money and borrowing and spending. Does that decrease? And then also the fact of, okay, hey, the rate of return, is it looked at the same? Okay, so now when we say, all right, now yields are dropping, now that's starting to say, okay, hey, well, I'm not getting I don't see the opportunity. I don't see the benefit of me getting into bonds right now, or 10-year yields or 30-year yields or whatever else. So you may see that those auctions will probably be very light. And we see that, okay, hey, that inflation, we're hearing a lot of the narrative saying that, in the sentiment saying that inflation is very much so transitory, AKA temporary. So essentially, why would I stick around? So if that's the case, I'm going to go somewhere else where I can get a higher beta, which is AKA in growth stocks, and I can get a better rate of return. So when you see interest rates dropping, AKA the reason why we're down to 1.46 in the 10-year yield, which matters, if you get the chance, go look at what the 10-year yield kind of like reflects as homework for yourself. And then look at what the 30-year yield or the 30-year note looks at as well. So 10-year note and 30-year note. So when we look at all of those pieces of like we're dropping in the yield, now investors are saying, okay, hey, I feel more risk on to go towards equities. Now, I guess I can pull it up on a chart for everybody, since this is Trade Talk Tuesday.
How nice of you.
Lord. So I'm going to just pull up the 10-year as we look at, for example, a year ago on, let's say this is the 10-year Treasury note on CNBC, where you can pull it up, and here you go. So as you can see, we dropped significantly during this point in time, thanks to COVID. So ultimately, Fed said we're going to cut rates to zero, and boom, that's where we've stayed ever since. Now, of course, the Fed is still saying that we're going to do that, but Wall Street is like, well, wait a minute, we're seeing significant things like inflation that are going up. Now, what's driving that types of inflation? Well, think about it. When you had manufacturing and everything else go to pretty much stand still or stop, even for a set of a month or a set of weeks, you have to think about it. Some manufacturing plants that close, they have to do all that ramp up time. So when they're ramping up, the world doesn't stop like consuming. The world doesn't stop consuming. So ultimately now you're hitting places like your stockpile or your inventories. And then you get to a point where, say, for example, you may find a place where it's like you run out of existing or pre-existing inventory, and the amount that you're producing is still not enough to keep up. So with that being said, that drives up things as it pertains to the cost, because of course it's like, okay, hey, low inventory, high demand, and of course price spikes. When we think about like also the things of like wages growing, and at the same token, the cost of goods being the same, that's not going to happen. As people start to make more money, then ultimately the cost of goods around you start to cost more. Hence the reason why, if you ever want to run it as a test, go pull up, like, for example, go look for a car on any place and pull up the exact existing car that is in your area, and then look at it in, say, for example, a different zip code, and see exactly what the cost is. You'll find that, say, for example, a car in, say, for example, Seattle will cost a lot more than, say, for example, buying such a car in, say, for example, Montgomery, Alabama. is because of the fact that the wage inflation is way higher here, where people are making more in, say, for example, specific geographical locations versus in a specific area. And thus, essentially, the cost of goods or the cost of things will adjust. Now that I've just given that brief little lesson, let's talk about it from the standpoint of now, where are we? The Fed has just said that, okay, hey, we're going to keep rates as they, we're not going to raise rates or anything like that. We see that we acknowledge that there's inflation here, and we acknowledge that the fact that we put it at a 3.4% versus a 2% or 2.4%, so a whole 1%, we acknowledge that, but we're still not changing our course. Now, the reason why I say that it's always good to look at a 5-year, because here's what the treasuries have looked like. The 10-year treasury has looked like for the past 5 years. Now, it's funny because essentially, if we run it as a comparison to, let's say, an Apple, as you can see, even though that we saw that the yield and everything else was moving, though that you still see that, for example, in moments in which that it's dropping, you see Apple ascending. And then essentially when it reaches its highest point, Apple starts to underperform. And then essentially it's like they typically run in tandem. But then we created this moment where pretty much interest rates were wiped off of the face of the earth. And with that being said, then the only thing that you had left that was on the table, thanks to quantitative easing from the Fed, you saw a huge spike in, say, for example, people turning to the stock market, aka equities. And that's what made them more attractive. Now, are equities still more attractive than the interest rate yields? Yes, 100%. Do I see interest rate yields getting back up to a certain point? Yes, I do. But yet at the same token, will it stop the show as it pertains to most of your stocks? No. In the grand scheme of things, when we look back at it, when you look at it on a year chart, you will see a dip, but at the same token, you will still see that we're still on an upward trend trajectory for equities.
Sweet. Question. Let me see. I'll save that question for last. Okay. When is the Xilinx deal supposed to go through?
Oh, I knew you'd come for me on this one.
Well,
I got set up.
Set it up.
All right, so I'm going to tell y'all a story, and I think that this is going to be the final piece to it, and then unless Jolyn has another question. So we heard of a story about, for example, AMD acquiring a company by the name of Xilinx, right? Mm-hmm. And the deal is expected to go through. I mean, we're probably going to see the vote go through from the EU on June 30th. And then essentially we pretty much move towards going towards the closing format. The offer came out available, or the offer was made on October. They voted in, I think, April, and both sides had agreed. So now we're just going through the formality part. But there's something that I guess I should show everybody, and just as a simple precursor, for folks to look at. If you go to the AMD Investor Relations page, you'll see something pretty interesting. Because when we look at, say, for example, AMD to acquire Xilinx, it tells you a very, very interesting story. So here we have where it's like it reads all this information as it pertains to the transaction. Now, the interesting thing to note, a lot of companies typically do a cash and a mixture of stock, or just all cash offer, depending on what they do. But in this case, AMD is making an all stock offer. Now, this is going to be very interesting for AMD because of the fact that if you look at the market cap for AMD, and if you look at the market cap of Xilinx, and of course with the acquisition, that should add to the market cap size of AMD moving forward, which investors will have to account for. But there's something even more interesting that I wanted people to pay attention to. And this is where it comes down to the advisors. Because here we see that, for example, its advisors to the deal is Credit Suisse and DBO for AMD. And then for Xilinx, we have Morgan Stanley is the financial advisor. Now, of course, you have BofA Securities that's acting as financial advisor as well as for legal counsel, but whatever, we'll move on. So essentially, you have Credit Suisse, DBO, and Morgan Stanley. I'll send everybody home with some homework. Interesting fact. I want you to look up exactly what was Credit Suisse, what was DBO Partners, and what was Morgan Stanley's price target for AMD. And it will tell you a very interesting story, because the fact is like, if you look into it, one of these firms, whether it's Bank of America, Morgan Stanley, DBO, or Credit Suisse, one of these firms, if not all of them, have essentially, they're taking some significant payback as it pertains to stock, especially since this is an all stock offer. And it would be very, very interesting to see what their price targets are and then to see exactly where their money is going as it pertains to AMD is concerned. Now, of course, take this into consideration. The person whom which that is running the deal, I'm probably sure is Credit Suisse and alongside with DBO. So I would really be interested to see what Credit Suisse's price target is for AMD over the next 6 to 12 months, because it's going to be very, very telling as it pertains to what they project, especially as it pertains to this deal. I won't go too heavy into it because I don't want to spoil the fun for everybody, but I will say this. It should be a very, very interesting read.
Okay. Wow, I should have set this up a little differently because the last well, we can still get into it. There's one more question that we have time for. Apologies to the questions that did not get answered. But here goes one. What can we expect from Microsoft Windows 11 event? And is it a 52-week high, a buy rumor, or sell the news type of vibe?
I don't know, man, because the last time that we seen Microsoft Windows literally come out, I think that was like 10 years ago, where we saw a release that took place. I mean, think about it. Wow, it's been in existence for quite some time. And this is going to be pretty game changing because, honestly, it's like you have to think about it. All those PCs that are out there, also the frameworks, the embedded systems in which that are used, that's all advantage Microsoft. I would say here's my little hot take. I would not be surprised if I see Microsoft go for a little bit more of a run because of the fact that I don't think that a lot of folks have priced in, and Microsoft has been very good at keeping it quiet, except for the little leak that came out for the stock. But it's very, very interesting because now they built a system that most of the leaked videos you'd have to run in, say, for example, some type of virtual machine. And just to think exactly how smooth it's running in virtual machine, imagine all those Mac users that couldn't run Windows on their new M1 chips that can now potentially run Windows on those M1 Macs. Imagine what it looks like for the OEM providers that will definitely be paying to essentially put Microsoft Windows 11 on their platforms. Imagine what that's going to look like, especially when you start having folks run Windows like this, use Windows just like the same thing that you use for Office 365, as if Microsoft becomes a part of the Office 365 suite. So it would be very, very interesting to see exactly what's happening because of the fact that you're seeing a lot more virtual experiences that are taking place. So I would not be surprised if we start to see that Microsoft Windows 11 becomes that framework. So. And lo and behold, for anybody that doesn't know about my history, I used to work at Microsoft, and guess what division I had the privilege of serving under when I was there?
Which one, Mark?
Windows.
Well, there you have it. Well, we got 1 minute left. I just want to say that Thursday's episode is going to be fire. Super fire, because we have a special guest. Shout out to Rob Maurer
from Tesla Daily.
So we are going to be heavy geeked out on Tesla. So
when she says we, I will.
Yeah, I don't geek out. That's not my vibe. I partake, I participate and celebrate. But anyway, don't hate on me. Don't hate on me.
That's the person who has galactic in their name. I mean, that's kind of geekish.
Anyway, that's a whole nother other. But yeah, let's
I will say this though, pay attention to for those in whom which I'm gonna leave it alone.
Yeah, I'm looking at the time. We saying too much. Anyway, the point is that this was Trade Talk Tuesday with a little sprinkle of Hot Take Thursday. Little sprinkle.
Yes. I want to send a special shout out to XOY hitting 175 today, by the way.
Yeah, too bad we don't have time to look at a chart for XOY, but shout out to XOY. There's a lot of shout outs. It was an interesting day in the market. I mean,
it's gonna be interesting when them shouts start to become roars.
Ooh, okay. Lion vibes, Lion of Judah. Was that what it is? Yeah. Okay. A roar. I'm ready for it. let's get up out of here, Mark.
All right. Well, until next time, I'm Mark Monroe.
And I'm Jolene GC, in the place to be.
And this was Trade Talk Tuesday with a slight hot take. We will see you on Thursday with Rob Maurer from Tesla Daily. Tell a friend to tell a friend, because it's going to be interesting. And on top of that, you get to hear it straight from somebody else who's just as bullish as I am, but maybe with a totally different perspective with a lot more data in their bag. All right, y'all. Have a great weekend. Wow, I'm already thinking weekend vibes. But have a great week. We'll see you on Thursday. It's definitely a weekend vibe over here. But have a great evening, y'all. I will see y'all later. I may actually hit up Instagram.